Bitcoin's network is showing signs of a major slowdown. Transactions have collapsed, fees are at rock bottom, and miners are earning less than ever. Is this a warning sign for the market, or just a temporary dip before the next big move? In this video, I'm breaking down exactly what's happening on the Bitcoin network, why activity has dropped to its lowest level in a year, and what this could mean for Bitcoin's price going forward. Let's dive in. Bitcoin network activity has just dropped to its lowest level in a year. The data is in, and it's showing a sharp decline in transactions, active addresses, and overall usage of the Bitcoin network. But what does this actually mean for Bitcoin's price? Is it a warning sign or just a natural cycle before the next surge? Let's look at what's really happening under the hood and figure out whether Bitcoin is overvalued at its current price, or if this is just another phase in Bitcoin's long-term journey. Here is CryptoQuant's Bitcoin Network Activity Index, which tracks key metrics like active addresses, transaction count, and block size, has fallen 15% from its peak in November 2024. Right now, the index sits at about 3,700, a level we haven't seen since February 2024. And what's even more concerning, it has dropped significantly below its 365-day moving average. Now, why is that important? Because the last time we saw the index fall below its long-term trend was back in July 2021, right after China banned Bitcoin mining. That ban triggered a massive drop in network activity, miner shutdowns, and a temporary collapse in Bitcoin's price. But eventually things recovered as miners relocated and adapted. So, is this current drop just another temporary slowdown, or is something bigger at play? The biggest factor driving this decline is a sharp drop in transactions and active addresses. Essentially, fewer people are using the network right now. The total number of daily Bitcoin transactions is currently around 346,000. That might sound like a lot, but it's actually down a massive 53% from its all-time high of over 700,000 back in September 2024. That's more than half the activity wiped out in just a few months. The number of active addresses has dropped by 20% since November 2023, and today it's sitting at 942,000. One major reason for this drop is the collapse in activity around the Runes protocol, a system that allowed people to mint tokens on the Bitcoin network. When Runes first launched in April 2024, Bitcoin transactions absolutely exploded. The daily number of opcodes, which are essentially special pieces of data inside Bitcoin transactions used by Runes, spiked to over 800,000. That was huge. For months, Bitcoin's transaction volume stayed high as users flooded the network to create new tokens. By November 2024, the protocol was still handling around 500,000 opcodes per day. But since then, activity has collapsed. And because Runes was such a big driver of transaction volume, that collapse has had a massive impact on the overall Bitcoin network. Another clear sign of low activity is the state of the Bitcoin Mempool, which is basically the waiting room for transactions before they get added to a block. Back in December 2024, there were 287,000 transactions sitting in the mempool, waiting to be processed. That's what you'd expect when Bitcoin is in high demand. There's a backlog, fees rise, and miners prioritize the highest paying transactions. But today, the mempool is practically empty, with just 3,000 transactions waiting to be processed. That's a 99% drop. Now, why does this matter? Well, an empty mempool means that transaction demand is extremely low. And if there's little demand for transactions, it can take a long time for network activity to pick back up again. This is in stark contrast to times when Bitcoin's network is thriving. Typically, when the market is hot, the mempool gets clogged up, transaction fees skyrocket, and people are willing to pay extra just to get their transactions confirmed faster. But right now, there's no urgency, no congestion, and barely any competition for block space. If you're finding these on-chain insights valuable and want to stay ahead of the game, hit the like button, subscribe to the channel, and turn on notifications so you never miss an update. Now let's dive back into the analysis. And that brings us to another key indicator of network health: transaction fees. When network demand is high, fees skyrocket because users are willing to pay more to get their transactions processed faster. But right now, daily transaction fees are sitting at just under 600,000. That's a huge drop from the $4.7 million we saw in late October 2024, the last major spike in fee revenue. That's a big deal for miners who rely on transaction fees as part of their revenue. Right now, transaction fees make up just 1.8% of total miner revenue. That's incredibly low. Miners are making almost all their money from block subsidies, the fixed Bitcoin rewards from mining new blocks, rather than from users paying high fees. If this trend continues, miners could start shutting down operations if fees aren't enough to sustain profitability. And when miner revenues shrink, that can lead to sell pressure as they offload Bitcoin to stay afloat. Now, here's the big question. What does this all mean for Bitcoin's price? Based on network activity alone, Bitcoin's fair value currently lies somewhere between $48,000 and $95,000, according to Metcalfe valuation bands. For those unfamiliar, these valuation bands measure Bitcoin's price based on network usage, rather than just speculation. Historically, Bitcoin has traded within this range whenever network activity has been in line with its fundamentals. But at current prices, Bitcoin is actually sitting above that range. That suggests it might be slightly overvalued, at least from a network fundamentals standpoint. These valuation bands have actually been trending downward since March 2024, ever since network activity started slowing down. So, does that mean Bitcoin is about to crash? Not necessarily. Bitcoin's price doesn't always move in perfect sync with network activity. Sometimes price can remain elevated before network usage catches up. But it does mean that right now there's less organic network growth supporting the current price. So, what should we be watching for next? First, if network activity starts picking up again, whether it's from more transactions, an increase in active addresses, or new protocols driving demand, then Bitcoin could easily justify its current price or even push higher. But if activity stays low and fees remain depressed, we could see a period of sideways price action or even a pullback. Ultimately, Bitcoin has gone through phases like this before, and historically, slowdowns in network activity haven't always led to long-term price declines. But it's something to keep an eye on, especially if you're trying to time entries or exits in the market. So, to wrap things up, Bitcoin's network activity has taken a serious hit, with transactions and active addresses dropping to their lowest levels in a year. Fewer people are making transactions, and the mempool, normally a backlog of pending transactions, is practically empty. That's a strong sign that demand for block space has cooled off significantly. At the same time, transaction fees have fallen off a cliff. Back in October, fees were bringing in nearly $5 million a day, but now they've dropped to just over $500,000. That's a huge decline, and since fees make up only a tiny fraction of miner revenue right now, it could put some financial strain on miners, especially those operating on tight margins. And when we look at Bitcoin's price relative to its network activity, things get even more interesting. Historically, Bitcoin tends to trade within a certain valuation range based on how much the network is actually being used. Right now, that range suggests a fair value somewhere between $48,000 and $95,000. But with Bitcoin currently sitting at $99,000, it's a little stretched above that zone. Of course, markets don't always trade on fundamentals in the short term, but it's something to keep in mind as we move forward. So, while Bitcoin's price is holding strong, network activity tells a different story. Whether this slowdown is just a temporary dip or a sign of a bigger shift remains to be seen, but it's definitely worth watching. And that's all for today's analysis. Want more in-depth insights on today's topic? If you prefer written content, join my free newsletter for exclusive analysis. Click the link in the description. Thanks for tuning in, and I'll see you in the next one.